we may already be in a depression. Is there any safe place for your money? We have argued for a long time there's no such thing anymore as a safe asset, and you may want to take a diversified approach to something as mundane as cash. Is there any currency out there where you can hide in a depression? Let's look at the dollar first very briefly. We have to raise about $2 trillion, $3 trillion now with all the latest additions to the budget. We have to raise about $3 trillion this year in the debt markets. Now that means either that we're going to get high interest rates, long-term interest rates, because the cost of financing goes up. The Federal Reserve has indicated it doesn't want that because of the negative impact on economic growth that would have. But the second option is that the Federal Reserve may start buying federal bonds, treasury bonds. It has already been buying agency securities and to a small extent federal treasury bonds. That may then cause the dollar to plunge because there has to be some valve if and when the Fed starts buying treasury bonds. There's a third option, and that is that the U.S. can indeed buy all this, issue all this debt, but it will crowd out the private sector. And we see a lot of that already, that reputable companies have very difficult time accessing credit. Warren Buffett said the other day that his insurance business can't compete with all those banks that get these bailouts from the governments because there are government guarantees in those businesses, so the government is actually destroying the private sector here rather than helping it. But odds are that the Federal Reserve is going to be tempted to start buying treasuries bonds, as it has said repeatedly since last November. So where do you put your money? We discussed the euro the other day, and please look for the other YouTube video on that topic, which is on whether there are any other hard currencies left. But when one thinks about safety, one tends to think of the Swiss franc. Now, the Swiss franc is a reasonably reputable currency these days. The Swiss government has been issuing T-bills, Swiss franc denominated T-bills, since last October, yielding 0%, meaning people are willing to accept a negative yield after commission to loan money to the Swiss government. Indeed, the Swiss government has offered an unlimited amount of T-bills to those seeking the safe haven there. But that unlimited printing of money is a concern to us. The Swiss National Bank has also issued US dollar denominated T-bills as of recent, mostly to finance its guarantees to UBS. It's a very cheap way for them financing it, but it does open Switzerland up to foreign currency risk of a sort that it hasn't had in the past. In addition to that, the Swiss government has been extremely forthcoming in providing funding to Eastern Europe. Note that Eastern Europeans have loved to take out Swiss franc denominated mortgages because of the low interest rates. Now as Eastern European currencies are plunging, Eastern Europe has a problem, but it may become a problem for the Swiss National Bank if those loans are not paid back. Other European countries have the same issues. I'm just pointing out that the Swiss franc, while it continues to have a safe haven status, has been working hard to erode that status and has also tried to actually weaken the Swiss franc with active talk about how the Swiss franc is too strong. The one currency that you may want to consider as a depression play is Norway. Norway is a surplus country. You want to be with countries that are cash flow positive, so to speak, that generate cash. The Norwegians, even if they have problems, they can fix them with the reserves they have. It's a country in the Western civilization. Now, it's not a very sexy currency. It's highly correlated to the euro and Swiss francs. Having said that, though, if you do believe that things are going to deteriorate, the Norwegian crown is something to consider. The other currency that's been doing very well during this panic phase is the yen. Now, with the yen, we caution that it is indeed a panic trade. The Japanese industrial production has plunged. It's in depression, deep in depression territory. Foreign exports are down by about half. It's absolutely horrible what's happening in Japan, and the reason why the yen is doing strong is because there hasn't been any intervention in the Japanese economy, because it has been the panic flight. We would caution, however, that we are going to be at an end of this panic phase, quite possibly, and which means, though, not that things are going to go up from here, but it means that people don't think we're going to have a collapse of the world financial system. In that sort of environment, we believe that the Norwegian crown may be the safer place, and the panic trade in Japan is going to be fading out. Another currency we'll look at next time around is the Chinese yuan. The Chinese are in this interesting situation that they also have a surplus. More on that if you subscribe to our YouTube video or if you sign up to our newsletter at merkfund.com. As always, this is Axel Merk, Portfolio Manager of the Hard and Asian Currency Funds. Please do sign up for our newsletters, and I look forward to seeing you again soon.